Yeah!
No comments will affect the official remarks.
All right, we'll start in about 12 minutes. About 6 minutes.
Start the FX trading day for Oct 23 WA. Technical look at the Euro US dollar, yen, and pound US dollar. Kickstart the FX trading day for Oct 23 WA. Technical look at the Euro US dollar, yen, and pound US dollar.
Okay, about 3 minutes. All right. Let's get on with it. I'm going to mark this as the beginning of our live stream. So welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader. I'm a fixed income trader. I'm a commodities trader. I manage endowments for charity. What else? I have a macroeconomics degree from Harvard. Studied at MIT, Harvard Business School, Oxford, University of Oxford. Got through the license and registration process. Traded over $1 billion a month. What else? I don't know. Enough. I've been around. Before this, I was a venture capitalist and an almost successful high-tech startup entrepreneur in the Silicon Valley. There was a time when I walked into a coffee shop, my favorite coffee shop on Potrero Hill in San Francisco, and bought a magazine with me in it. It was the Inc. magazine Hot Startups issue of 1999. Yeah. And there's something cool about that, being a young man going into your favorite coffee shop and picking up a magazine, sitting down and reading the article. And that's me. Before that, I was in the nonprofit world, ran an organization of thousands of people. George Soros was on our board, a bunch of others. That was a good experience. And before that, I thought I was going to be an astronaut. So I worked at NASA. Turns out they don't send you to space if you got the diabetes. Well, I went to the Walmart. I met my wife at the Walmart, but I also got the diabetes. So that's me. Hope you're doing fine. How are you?
Euro pound price forecast reaches major support level at historic lows.
Cool. So this is a live Squawk Box. What do you think? It's pretty good, eh? Yeah, this is free. I'm offering this for free. I hope you use it. Would you be so kind as to leave a like? Would you please leave a like? I spent thousands of dollars building something that I'm giving away for free because I think it'll help you. Would you pay it back, please? Give it a thumbs up. I'd appreciate that. Cool. And I actually want you to use it. Real-time calendar, real-time headlines read to you verbally, so you don't have to sit and stare at this. You can sit and stare at your charts. But if you happen to be glancing, this updates every 15 minutes. You'll get a new trading pattern to consider. Yes, JP, I was a male model, but not at Abercrombie and Fitch. No couch casting for me. Yeah, I was too old. I was 13. Yeah. So let's take a look at the universe of technical and fundamental analysis. But please use, so like when I say please use this this live squawk I built for you, and there's 44 people listening and nobody's clicked over, like, why not? Come on, 44 people. Really? You don't want real-time news headlines? It's very expensive to provide. Yeah. I had to reboot the server earlier today, but no harm, no foul, right? Yep. Okay, so what are we going to do today? Well, it's Wednesday, so my oh my WTI. Okay, so today we will be using traders.com, fundamental and technical research tools. I'm also using the Traders Way MT4 trading platform. So we got strategy and execution. Bada bing, bada boom. We'll just take a quick glance here because I already did this hours and hours and hours ago. Let's try this again. Okay, we have Bitcoin down 1%, dollar up 0.5%.
Silver price forecast. Silver US dollar corrects below 34.50 as US yields surge.
Thank you, me. S&P 500 flat right now, but is going to likely open down. Yeah, Dre, but all that was set up a week, even 2 weeks ago, all that was set up, Dre. So yen is weak. Yeah. Yeah. The hard part is that of just being patient, but that was an easy setup. So yields are skyrocketing, just blistering yields. So the treasury market is tanking. Oil back down to 70.
US dollar rallies to fresh 3-month high in the US dollar index and safe haven flight.
Dude, that was weird. Did you hear the microphone sort of pop as I was talking? The thing is, I was not talking. and the voice you heard does not have a microphone. But you can still hear the you can still hear the mic pop. That's weird. That's really weird. Artificially generated microphone pop. So I'm not going to go through all these because we already did this. If you like this information, you should join our groups. I mean, we go through this every day.
U.S. equities set for a soft start. Texas Instruments highlight struggling industrial econ.
I mean, right? We go through all of this stuff every day. So you should probably join us. We broke down silver into digestible pieces today, looking at seasonality. And we spent a lot of time on the scorecards. So anyways, like for example, I can go to, pull up copper. So we got all this data, but I already did it. So I'm going to move over to the technical side. Excuse me.
Mexican peso edges lower after Mexican retail sales misses forecasts.
All right. Okay. Rand showing U.S. dollar strength. Sorry, I got to clear my throat again. Hang on. What is it? Man. I wonder if it's a medication actually doing that, not the ghee. Take a look at I see dollar strength across the board, huh? Mexican peso, okay, pound dollar. So we're living in a world of dollar strength. Okay, just again, I'm looking at this peso Gartley. It's showing dollar strength. So the one thing that's working right now are the yens. And so like this ascending triangle, we set this up on our charts, I don't know, weeks ago. But this idea that, when you have a top, but along the way,
Crude oil eats into this week's gains with Blinken visiting Middle East for diplomatic solution.
okay, so the whole point of this pattern is this. And we've had this set up for a long time. Like, not just days, many days, a week and a half. And so now that the yens are working, a lot of people are going to be interested in it. But it saddens me a little bit that you're not interested until after it's happened. Right? But I want something better for you, right? I want you to be planning things in advance. So like, this kind of stuff. So 1, 2, 3, 4, 5, 6 trading days ago. 6 trading days. So a week and a half ago, there was a logical, if you were a bull, buy opportunity. And so now that it's happened, I'd hate for people to just like now get on the clue train, but now you're buying it at resistance. You're supposed to buy low. Okay. And so that's all. Like somebody said that the yens are moving. Yeah, you're like, yeah, but we've gone through all these yen pairs over and over and over and over and over again. So here's another situation of top, but rising bottom. Okay, that's bullish. Even TRADARS has that for you, right? You look at Kitty CAD. This one really went well. Okay. Yeah, went really well. Cool. As it should. So anyways. So what's happening here is we're taking out all the bearish stops. Okay. Yeah, Richard's long in the Aussie. CAD had a better score at traders.com. When you look at the macroeconomics, CAD for some reason had a stronger score. I'm not in love with CAD, but I'm cheering for CAD. But yeah. Right now, obviously, it's led by U.S. dollar strength. But I'm weary or leery of that sticking around. So I just got to, there are other things going on. But look at higher high, higher low, and then a rising wedge from there. Let me show you.
Gold pulls back below $2,750 level on profit taking.
Okay. That's bullish. Right? Yeah, it's bullish. It's in the flashcards. If you're not sure how to trade that, it's in the flashcards in the description below. Okay. Oh, thank you. I appreciate that. My analysis is always great. Good. Well, I try. Cool. But you see, double bottom, higher high, higher low, buy the dip, wedge, 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 apex pop. And the pop is all the bears buying. See, an amateur, and even worse than an amateur, is YouTube gurus. They tell you it's people buying here, like what they think is it's bulls. No. Bulls buy here. Bulls buy here. Bulls buy here. Well, an amateur YouTube guru person doesn't understand that. So they get that wrong because they think it's going up because bulls are buying. Well, that's not true at all, because bulls buy low, bulls don't buy high. So this is bears buying because they're short here, they're short here, they're short here. Every time there's a short, they add a stop. And all this time, it's failed. So they give up. They either get out, which is a buy, or they jam their stop closer, which is also a buy. And so what are you going to get next? Up, which has already happened. So now amateurs, instead of planning and buying it down low, they're going to buy it because now it took off. But the other bulls that bought it low, they're going to take profit. It's going to come back, wipe out the amateurs, and then bulls buy it again because there are no bears left. We already killed all the bears. The bears have been slaughtered. So what happens is the bulls that had trade plans early, they're going to sell their positions to amateurs that are late and that don't plan their trades in advance. So the transfer of wealth goes from the person that bought early and now will sell out at the top. The transfer of wealth goes from the amateur that then buys them out. The thing collapses. And then those that are, again, pros, buy it at the role reversal when the amateurs get out for loss. So then the buyers buy it back and take it up. But there are no bulls. You see? Burn, to be fair, I don't watch any, so I guess I really don't know what I'm talking about. I guess what you're saying here is they're probably better than that. And okay, then that's good. Yeah. Well, I don't know if it's rich, pure mathematics. It has more to do with behavior. It's not that they're richer. You don't have to be rich to buy low. And you don't have to be poor to buy high. But it just kind of works out that way. But you have to think what kind of amateur or what kind of trader would get involved now after a move like this all the way to R3. Well, that just doesn't even make sense to me. But there's a lot of people that are now going to do it. That doesn't make sense to me at all. That's a hard out, not an in. And I always wonder, okay, you didn't like the double bottom? You didn't like the higher low? Right? Then you got a higher high and you didn't like the higher low? But now you like it up here? I scratch my head. Oh, is that right, Bernd? Then that's good. That makes me happy. Yeah. That's good. Okay, so that's my point. You're supposed to like the double bottom, the higher low. You're supposed to like the higher low, but a lot of people are only going to get involved now. Right? And so that's the part that bothers me, but we've had this set up on our charts for 10 days.
Bank of Canada rate decision ahead. What technical levels are in play for the US dollar Canadian dollar?
Yeah. Come on, tell me, this squawk running in the background is killer, isn't it? while you're doing your analysis, you're getting headlines read to you by a beautiful, beautiful, beautiful woman. Wait, she doesn't have a body. Yeah. Oh, well, she's still beautiful. You're beautiful. You're beautiful. Yeah. I mean, killer, right? It is killer. What a great use of technology. Yeah, Jordan's on it. Yeah, her voice is even more beautiful. She's got a beautiful heart and soul. Wait, she doesn't have a heart or soul at all. But anyways. So again, just a heads up, if you go into your browser extensions, okay, you can go into like find the store, like manage extensions, and then you're like, where is it? Go to your Chrome store. And then you can do like video pop out. Find out there's many different tools. Find the one you like. I don't know. I don't recommend a particular one. I have a random one. I don't know which one. So you figure out which one you want, load it into your browser. And so then all you have to do now, once you have it loaded, is you pop out the YouTube video. Now you can close this page entirely and it'll float. It's really cool. Okay, it's really cool, isn't it? So what I'm wondering here with these patterns is we've had them set up and they seem like they're moving. This one hasn't made a higher high yet, but if it does, it sets up the immediate higher low. Was that right, Ashish? Yeah. Yeah, trucking mogul. Yeah, absolutely. Oh, cool. I appreciate that, trucking mogul. See, my vision is for you to be able to make your own decisions without a YouTube guru. So at some point, like we're always around, like when it comes to traders.com, like I've shown you almost every day, there's 5 or 6 hours of performance coaching every day, you working with a real human being, right? But ultimately, I want you to be able to make your own decisions. And so having been able to pull together a software platform for decision making, that makes me really happy and proud. It makes me feel like now you have tools for you to make your own decisions and be an independent trader. There's no shame in having performance coaching, right? Right? Because you're a professional athlete competing in a competitive world. But to have the tools now and not just like log into FX Bootcamp and like Wayne will help me set up a trade. Now you're logging into traders.com and you're doing your own analytical research, both fundamentally and technically. That makes me so happy. That makes me so happy. That it's not just a YouTube guru with a training course, you know? Hey everybody, I drive a Lamborghini. You should buy my training course. Oh, right. So it makes me happy that there's a real service beyond just coaching. That was created because I was lonely, if you recall the story from my book. There we go. This is how I had it. Is that right, Peter? Yeah, let's go over there. So I suspected that S&P 500 was going to have a bad day. So we can go look at that. And Dow's having a bad day for sure. And there's our S&P. Yep. Bad day, totally makes sense. I talked about it at 7 a.m. this morning. It's now almost 10. So 2.5 hours ago, we talked about that just sort of matter-of-factly. And will it last all day? That I don't know, right? But let's say you were day trading this. You go insert indicators, custom, biased pivots, make it bearish, daily. Okay. And there's your sell zone. And our target for today is basically that pink line that I already have on my charts. Right? Yeah. Yeah. Cool. Yeah, so we're just following this down, right? You don't have to be a brain surgeon, right, Richard? You sell high, right? So there's an opportunity to sell high in a selling pivot with a target down here. And one of the things weighing the S&P 500 down, as you probably know, is McDonald's and their nasty onions. Most onions are good for you. I don't know you know this, but onions have an enzyme in them that will hunt for cancer-causing cells and kill them inside your body. Well, unfortunately, the onions at McDonald's kill you. And that seems to have taken the stock down. The price of McDonald's is down. Last time I looked, it was down 7, probably down 10. And McDonald's is the 35th.
U.S. stocks trading lower. McDonald's and Starbucks under pressure.
Oh my God, I talked over myself talking about something. Gee whiz. So anyway, McDonald's is the 35th biggest by weight in the S&P 500. So if it's down 10%, it's going to bring the S&P down. I don't know. I don't buy single stocks, Jordan. So the answer's no. I don't, would I want to own McDonald's over Wendy's or something else? I can't buy Chick-fil-A. Well, for that, you need to analyze the managerial team and cash flows and profitability and their supply chain reliance and other factors to see how they compete in the fast service market. And I would have to essentially build a case study of McDonald's team and infrastructure is significantly better than the others, and they have an unfair advantage in market share that would be tough to take away from them. So I would want to own it. Well, I don't want to do that kind of research. And the limited research I have is driving to grandma's house and we have to stop for lunch. We walk into a McDonald's, it's dirty, it's busy. Everyone's standing around waiting for the food they ordered.
Breaking. Bank of Canada cuts its rate by 50 basis points.
And then
Bank of Canada interest rate. Decision meets expectations, 3.75%.
Okay. Bank of Canada did the rate. Okay, thank you. And then you get your food and it's terrible. It's low quality. The hamburgers are not even hot. The cheese not even melted. And they didn't give you napkins, for crying out loud. So I'm like, I don't want to own that company, but maybe it makes money hand over fist. I don't know. I think right? So so generally I don't want to do that type of research. So, owning McDonald's, no, pass. Yeah. But, I might not like eating there, but it might make money. Maybe it's great. I don't know. But my point is I don't do anything like that. So what I do is I rely primarily on taking out single stock risk. See, I could buy McDonald's, but maybe Wendy's is better. So now I picked the wrong one. Or maybe all stock prices are down because of what happened to McDonald's. Well, then if I found Wendy's was better, but it was taken down by short-term fear about what happened to a different company, well, maybe I buy a dip on that. But if Americans decide to wake up this morning and be healthy, they're not going to eat at these places. So there's a risk. Americans might actually want to be healthy. Okay. Do I want to own that? Well, I could buy the industry and say, how about I can buy an ETF of all the fast food restaurants? Well, why not diversify outside
Tech sector glimmers while consumer goods face headwinds.
Why not diversify outside of fast food and put in fast casual and maybe, even better dining levels than that, and buy just sort of a restaurant industry ETF? Or consumer discretionary. And all of a sudden I'm like, you know what? Why don't I just buy the entire S&P 500? Richard says no real action after the BOC announcement. Yeah, well, we already knew it. That's why. So anyway, I don't want single stock or sector risk. Okay, I'll just bet on the macro of the U.S. economy expanding or the U.S. economy contracting. I take out a lot of different risks out of there. Because Dow and S&P 500 and NASDAQ do a lot of business overseas, because I'm based in the United States, I don't really need to invest overseas because all the companies I have here already do business overseas. And I already have that exposure without facing foreign exchange risk. So, it's that kind of stuff. Oh, my pleasure. It doesn't mean I'm right, but it does mean I'm not a stock picker. In a way, I'm still just trading the dollar. Okay. So anyways, that down day is likely to be caused by McDonald's. Okay, now we are hitting targets. Oops, let me shift this around. Sorry about that. We are hitting targets and bounces are more likely now. Okay, so we've done the perfect M3 to M1. Okay, there is reasonable chance now of back up. If not today, let's say by next week, it's plausible. So I will readjust this and say it's more likely now, not that it will happen, but it's more likely now than before that we start to look for an up. And it's a roll reversal off of this area. Okay? So M3 is here, M1 is here. That is the pattern. And what we're doing, if you understand the moving averages well, all we're doing is buying the Dow at the daily 21 EMA. Oh, it's so good. Okay, it's so good. Okay. Okay, you 57 people. Come on, please. 57 people. Click. Please click the thumbs up button. Help me get traction for this. Just take a second. And then if you want, please leave it running. Just open it and then minimize it. Well, silver's the better play, but we can look at metals if you guys want. If I could, you know I would. If I could, I would let it go. Okay, let's get back to a smaller time frame. Okay. What do you stink? Okay, you're a bull, right? Oh, excuse me. You're a bull. So it changes to bullish. Cool. Okay. So you see where we're at, right? Cool. So now that you have that in your brain, I'm just going to change it now. Well, let's just look at one thing. Okay, so your thought should be, are you buying this? There's no other thought. Okay. Okay, and so now you go to a smaller time frame, or you can leave it here. I just want to change. And drop this into a smaller time frame, maybe. Okay, are you a buyer or a seller? You have to start with that, right? So this is a 21.55 plus a real-time 25, non-lagging 21. Lagging 21, lagging 55. We have my price action pivot points. The thing is, you have to already know if you intend to be a bull on this. If you don't know this now, you can't trade this. Now, if you're a bear, well, even that, you have to know that you're a bull or a bear. What I was showing you is there's some reason for some people somewhere down here to consider this support. So, what's the next play?
Breaking. Bank of Canada went for the jumbo rate cut. Macklem statement, we anticipate cutting our policy rate further.
Ooh, yeah, Canada's slashing and burning, huh? And you got to feel comfortable on the time frame that you're playing too. So if you can climb back above that, you might have an op. Okay. See, this was bullish until we got to about there, and then you can even see it's got bearish continuation on it. And so if it's going to stay a bear, it has to do it on this level. So if you're going to stay a bear on gold, this is your shorting zone. If you want to be a bull, it's going to climb up, come down, and you're going to use that as a platform for buying.
US dollar yen extends uptrend on political uncertainty, whilst US dollar benefits from economic outlook.
Whilst
US dollar Canadian dollar little changed after interest rate decision.
Just so lovely, huh? I created one of these with non-lagging moving averages. Was it this one? Was it Aussie? No, I think these are regular moving averages. But you see how I have it all marked out? It's not a complicated pattern.
Main points from the BRICS Declaration.
Maybe it is these ones. No. I put them somewhere. The leading moving averages. Maybe I have them down. This one, maybe. Well, this is a version of it. I don't remember. So 1, 2, 3, 4, 5, 6 days ago, we became bullish on euro yen. What do you guys think?
United States existing home sales, YMAM, below expectations. 3-point dime in September. Actual 1M.
United States existing home sales change, MOM, climbed from previous 2.5% to 1% in September.
It's nice. It's reading the news that came out 2 minutes ago. It's nice. So anyways, double bottom. And then boop, 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 up, 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 up. So this goes all the way back to the first trading day of the month. And that's when we technically became bullish using leading averages, not lagging averages. And you've been a bull ever since. Okay. Okay. So you see sloping up, but top, 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 top. Okay. And then a breach. Take out all the bearish stops. Up. Now we're to standard
Eurozone
deviations.
consumer confidence in line with expectations, 12.5 in October.
U.S. September existing home sales 3.84 M versus 3.86 M expected.
Dude, shut the back door. This is so good. I'm just getting this from the YouTube page, just like you. Eurozone consumer confidence in line with expectations. Yeah. Thank you for the few of you that did the thumbs up. I appreciate that. Okay. Byrne says, isn't a average always lagging? Well, the math of this one is shifting it around, and it's trying to, using the shift up and to the left, it's trying to anticipate where the average will be in the future. So it's not really an SMA, EMA, WMA. Okay? It's taking that math and then shifting it up and to the left.
China gold concentrate imports sink 22% as tax proposal cools market.
So that's why I call it a leading average, Bernd, is it's trying to predict where the 21 EMA and the 55 EMA will be in the future. And we want that because where they are now is a lag. So we're trying to take the lag out. So it's, okay. Is it a leading tool? Well, sort of. It's using the slope of the mean, right? I'm not going to do the math, everyone. Don't get all upset with me. Okay. So we do the first calculation. Then you do the second calculation. Okay. Then you do the third one, which is you calculate the variance on all of this. So now that you got the rise over the run, which is the slope of the mean, okay, you got this line figured out now. That's what these two things are doing. What's the middle line doing? Then you calculate a variance, a variance, a variance, a variance, a variance, 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 and now a new variance, okay? And then you'll see some of the variances on one side sometimes are greater than the variances on the other side, and some are low and low, and then some are big and big. So what you want to do is standardize them by taking the square root of them, and so now you can say, well, usually when price goes this low, it goes back to the mean. And usually when price goes this high, it goes back to the mean. So we've standardized the variation. We call that standard deviation. And so that's all that really is. Is it leading? Well, because we have the slope of the mean, we can project the slope infinitely into the future. And then if the standard deviation of all the highest highs and lowest lows end up being this distance, then we take that distance and we put it on both sides. Okay? And then we can then take that same slope and project that into the future. So is it leading? Yeah, sort of. The only thing is every candle this changes. So that's that. Oh, Bernd, you missed it? What I was saying is these are not moving averages. They're moving averages that are shifted. Okay? Up and to the right. And they're trying to emulate where the EMAs are going to be in the future. Not where the 21 EMA is now. It's a 21 EMA adjusted for where it might be in the future. So therefore, that's why I call it leading versus lagging. So it starts with the lagging calculation, and then you adjust to make it leading. Right? So when I go to indicators here, it's 0 lag moving average. And there's a shift here. Okay? Okay? And of course you can adjust this if you want to, right? You might think that's where it should be. I found 4 works pretty good. You might like 3 better. Okay? Okay, so you could use this if you feel like it's more accurate. Cool. Then you could go
US dollar, Canadian dollar holds gains near 1.3850 as Bank of Canada cuts interest rates to 3.75% as expected.
Cool. So now you go to template and you save the template. And template name. What did I have it called? I called it this one. Replace it. Cool. So now I can go to Kiwi. Okay. Kiwi hasn't busted out yet, but let's change this. And now I can go to 0 lag 2155. If I would, you know I could. If I would, I could. All right. Nice, right? You see how all I'm doing is moving it left or right? I'm just changing the data set. What am I measuring?
United States existing home sales, MOM, below forecasts 3.9 mem in September. Actual 3.84 mem.
Dude, I am so happy with this squawk. I am so happy with this squawk. Okay, let's see if the Swissy's still strong today. Yeah, dollar's still fairly strong. Yen is still very weak, very cool. A little off the top for pound. Aussie's still not the best horse. Kiwi's still not the best horse. CAD, okay, giving a little back after the announcement. You might want to look at it this way. And we're about 15 minutes away from oil inventories. How many people here trade oil? Yeah, well, we have a big event coming out in less than 15 minutes. No, about 15 minutes. Henry Hub. So anyways, so we're going to find out our inventories. And that often moves the market. Interesting. They have an
A look at the changes in the Key Bank of Canada forecasts.
So you can get this email too. There's also a weekly email that you can sign up for. Here they are giving you forecasts. Do you think that's helpful for trading oil? Yeah, it's amazing how much people just skip, huh? Like this information is just out there. Monthly short-term forecasts all the way to 2025. And yet people trade oil and they don't even read the government reports, huh? Yeah, you should get on their weekly list.
U.S. dollar resides near 3-month high markets hiding for U.S. election uncertainties. Bank of Canada's Governor Macklem. Our focus is to maintain low, stable inflation.
So just taking a look at some of these forecasts. Let's do it in that weird color. Let's do Brent first. Okay, Brent just between 80 and 90. And WTI about 80. What do you think of that? Oops. What do you guys think? Is that useful information? Sort of an average price of 80? No, not useful information, huh? No? Okay. Yeah.
Exclusive BRICS is for the fairies until China and India get serious, Mr. BRICS says.
Okay. So this is my favorite of them all, the granddaddy that I love to look at. Okay. So we have a certain amount of oil in inventory. And we want to look at the 5-year average of the highest high and the lowest low. Basically, the standard deviation of supply. Okay. And then we can look at how much oil we actually have. Okay, how much oil do we actually have? And we're at the very, 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 very bottom. Also, you can see inventory should rise, right? I want you to look at this and kind of, do your Y equals MX plus B. You want to kind of like, what's the average in here? I'm trying to do the average, right? And so our absolute number is very low, and we're supposed to rise up to the average here, right? And if we don't do that, prices are likely to be high. Okay, last week we had a drawdown, which was surprising, and we're supposed to be building up. If we don't build up supply, then we have dangerously low levels of supply. Now, let me ask you, was this visual helpful in understanding the number that's going to come out in 10 minutes, 8 minutes? We're going to find out inventory levels. They'll spit out a number. And people are like, all right, well, down 2.2 million barrels. You're like, okay, is that good? Is that bad? Well, you should look at it and go, oh my God, we need to be building up. Right? We need to be building up. So we're in this period like this.
Crude oil falls flat with weekly EIA numbers as game changer.
Okay. And if not, well, we just don't have enough supply if demand kind of picks up a little bit. Good little hack. Yeah, I love this one. I've been using it for years and years and years and years. Okay, so sign up for your email notifications. Okay. Cool.
Yep, I think I'm done. I'm spent. It's been over an hour, hasn't it? Yeah, hour and a half. Well, about an hour. That was your hour of power. Was it good? Look, please, please, I'm begging you, please use the squawk. You make me very sad when you're not using the squawk. There's several dozens of people in the live stream right now. Please come over to this live stream now. Please join us over here. You can chat if you want, or you can just let it run. But please drift over here. Run it for an hour. See what you like. See what you think. Please, please come over here. And if you're over here, I'd appreciate it if you subscribed and like. I need to get to 500 subscribers to unlock some features on YouTube. So I need some subscribers to help this. But maybe we can slam this up to 100 likes. Okay? I made this for you. I'd love for you to find how it's useful for you. Maybe you're like, I don't even get it. Why is this useful for me? Well, swing on by. Let's get together. Let's figure it out. Okay? So I'm going to be over here for the next few hours. I'd like to see you over there. Would you please join me? Thank you to Traders Way for providing our platform for trading and execution. Thank you to traders.com for the fundamental and technical analytics. And thank you for your time. I hope to see you over here throughout the rest of the trading day. Peace on earth. May the pips be with you. May your profits be above average.